Let's talk cotton for a moment. That's where we'll start our trek through the markets. Cotton market has been lower, down 68 points on the December contract at 79.11. You know, we talked to Kevin Huddleston earlier today, and he said, yeah, they're still optimistic about this cotton market, which over the past 6 months has gained 11 cents. It traded for a long time there in that under 70 cents, and then ran up to over 85 cents before we started tumbling down after that. So that's what we've seen here in the cotton market, at least over the last, 3 months is when we started that rally. So we'll keep an eye on the cotton market. Another market that has taken off, how about soybeans? And the November contract at $11.8425. It's trading 4 cents higher. We have the corn market. Corn is struggling. It did trade positive earlier in the session, about 2 hours ago. Hour and a half, 2 hours ago. It was in positive territory, but back in the red now, losing 3 cents, $4.79 a bushel. Here's Chicago wheat. It's taken it on the chin, $6.22 a bushel, down 13.5. Now losses for Kansas City, about half of that, off 7.25 at $6.69. And even the spring wheat contracts are now lower across the board. Chris Robinson's with Robinson Ag Marketing. All right, Chris, mentioned Chicago wheat kind of taking it on the chin. You're in Chicago. What's happening there?
Well, we got the worst crop conditions, right, in history yesterday. It's already been factored in, and this is a perfect example. You know, this is a futures market. It's not a right now market. So we had a tremendous rally. It was really a great gift, and now you're starting to see maybe some of the managed money that had been chasing this market really cutting and running. So we're down 13 cents in Chicago. KC's down 7. Testing big technical correction here. Now, if this holds, great. Maybe it's a dip to buy. I don't know, but it definitely feels like people that bought the headlines when we were at those 18-month highs in Chicago and we were at 3-year highs in Kansas City. You know, all that news has been factored in. And this is why people don't like commodities. It's very, very hard to trade. It is a futures market. And lots of times, by the time everybody knows about something, the market's moved on to something else. You mentioned cotton. You know, spot cotton had a tremendous rally, tremendous. We've given back half of it. So you're starting to see that now. And, you know, you mentioned that these corn's lower, beans are hanging in there. But, you know, corn is at a critical point here, Tony. I can't, you know, I'm not a big person that tries to scare people. But, you know, we've had a great rally. The managed money helped give us 1-year highs in corn, especially spot corn. These corn had 30-month highs. And now we're kind of hanging in here. And the next month is very, very, very important. There's an old expression, the bull needs to be fed every day. I sent out a recommendation to everybody that works with me. They're like, hey, if you've done nothing, this is a little shot across the bow. What's the driver? Crude oil. You know, crude oil is back under 88, 89 bucks. It was trading 87 this morning. So the big reason we had this rally in the grains was when crude oil went from 55 bucks to 120. And that's my only worry right now, Tony. It's not about the weather because, you know, the weather's been okay. We're going to have to wait and see if we're going to get a weather market. But right now, the number one thing I'm worried about is the fact that all this money came in on the long side, which is great. It gave us really good rallies in the grains. Now your risk is that these guys cut and run. So button up.
Okay, and don't forget, we get a big report at the end of next month.
Yes.
And if, you know, past performance has taught us anything, you better be buckled in and have a plan before that report hits at the end of June. Okay,
yes, sir.
Quick break here. Back with more markets and Chris Robinson on Market Day Report. All right, let's talk cattle for a moment. 362 higher front month, and the June contract trades at 251.85 and the August at 243.15. That's $4 higher. How about feeders? Well, feeders have been moving higher as well, and up 6.35 on the August at 355.80, 353 on the September. It's up 5.97. You know, roll out though to that front month for 2027, the January contract. Now, it's been trading in a little over a $4 trade range, but trades at 339.80. It's up 5.27. Trades very lightly compared to these others. But I'm just throwing out the idea that we're trading below 340 out in that January contract. Can we pull something from that? Chris Robinson's with Robinson Ag Marketing. And Chris, going back to your comment, we don't trade now, we trade the future. So what could the futures be telling us about what's coming in 2027?
Those deferred months, I mean, it's still pretty well bid. I don't have the chart in front of me right now. I was looking at August, but a pretty good recovery, Tony, from after a really negative cattle on feed. We hit 2-month lows 2 days ago, so a good recovery. A lot of people thought that we'd be sharply lower. We have had a bit of a correction. If you go out and look at, and I'll pull it up real quick since you're talking about it, January of 27.
Yes.
If you look at that chart, it kind of paused up there at 365. I think that if we can get January back north of 350, the fundamental story has not changed with cattle. There's not enough cattle out there, et cetera, et cetera. We're kind of tired of hearing about it for the past 4 or 5 years. But periodically, you have these big corrections, and that may be what we're looking at here right now. So we had seen the fact that we talk about managed money. They're still bet long, so that's a blessing. But my worry is there as well, is that if they decide to cut and run for any reason, we could get another type of correction we had back in November. And remember that we went from contract highs, we broke $85. Nobody gets a text message or an email before that happens. So this last little correction, and I'm looking at January of 2027 as well. We came from 65 to 330. We booked $35. If you don't have anything protected, it's probably a good time to look out there and take a shot at it, because the trend continues to be bullish. What you're going to try and do is dodge these bullets where we get these 40, 50 cent haircuts.
Yep, great points. I know I could count on you. Thanks, Chris. Chris Robinson, Robinson Ag Marketing.